Johnson Outdoors. Ticker symbol is JOUT. Currently trading for $47 per share. It pays a dividend 4 times per year, but my position is quite new, so I have not received a dividend from them yet. So Johnson Outdoors is a member of this group, which is called the Dividend Challengers. And to be in this group, a company has to not only pay, but also raise its dividends consecutively for between 5 and 9 years. So Johnson Outdoors has paid consecutive raised dividends for the last 8 years. So if they can keep it up for another 2, they will then move up into this group, which is the Dividend Champions. So I'll give you a quick look at some of these ones. So as the name suggests, they market and manufacture recreational outdoor products, so things for fishing, diving, paddling and camping, watercraft, all that fun stuff. They also sell particular things for underwater diving, like snorkeling equipment, regulators, buoyancy compensators, diving computers and gauges, wetsuits, masks, fins, anything that you'd need for diving. So they're in the recreational products industry of the consumer cyclical sector. Their current market cap is about $480 million. They have a PE ratio of 5.72, current revenue of $751.6 million, an earnings per share of $8.24, and a current dividend yield of 2.63%. So as far as I could see, their profits seem quite good and their debt seems quite good. They have an annual profit margin of 11%, and over the last quarter it's about 7%. Their annual debt to assets ratio is 32%, which is quite good. It is very good. And over the last quarter is 28%. And their annual cash flow from operating is $58.3 million. From investing is negative $21.3 million. And from financing is negative $9 million. So the company itself was founded in 1970, and this graph goes back to 1987. So it's a pretty good gauge of the full history of the company, since it went public anyway. And it's kind of an unusual graph. You know, it seems, although this might seem quite flat over the long term, the reason that these drops, raises and drops, don't seem very dramatic is because it's all relative to this area here, which is staggering. So up here, this peak we have here, this is the 16th of April of 2021, and it was $152 per share, and it has now fallen down to 47. And this blip that we have here, this is lockdown. So it had 2 drops that were worse than the lockdown drop, one in 2018 and one in 2019. It has a 52-week high of $117.99 and a 52-week low of $46.36. So the long-term history is about what you can expect based on the company's place in the Dividend Challengers list, that it's been paying them consecutively and raising them. Now, as far as I know, it does not mean that every single dividend payment has been raised. It just means that they're paying a higher dividend at the end of each year than the year before. So there'll be, say, 4 payments of 17 cents, and then the next one will jump up, next 4 jump up, next 4 jump up again. And it is quite common with stocks that have a reasonable dividend, so something between 3 and 5%. You know, they're not paying out so much that it will make the company struggle, or that they cannot continue to pay out the same amount. They usually pay out smaller, safer amounts so that they can not only maintain it, but pay a little bit more as the years go on. So overall, it's looking like a good buy. Johnson Outdoors. And their debt is good, profits are decent. They've been paying consecutive raised dividends for the last 8 years. The most recent dividend that they paid is for 31 cents per share. Annual dividend yield of 2.63%, so nothing to shout the rooftops about, but very safe. And overall, looking very good. So let me know what you think, and I hope that you found this useful.